Hey guys, Brian here with a few highlights from the letter. Last month we talked about the realignment of risk assets to the downside. The second quarter is over now and the alignment between stocks and bonds is making history. I show a gauge of returns in global stocks and bonds. The performance wasn't this bad during the COVID crash. It wasn't even this bad during the '08 financial crisis. I think this behavior really confirms what the Elliott waves are saying about the size and the scope of this bear market. Now, every bear market has counter trend rallies. We're probably getting close to one in Europe. I show a gauge of sentiment this month. It combines 15 indicators of financial stress in the Eurozone, bond spreads, liquidity, that kind of thing. Last time I showed this was in August 2021, and back then it was just historic complacency. We do have sort of the opposite condition now. So I'm looking at this in combination with Elliott waves to kind of get a feel for the likelihood and the magnitude of a counter trend bounce. Now, there's a lot to be said about the bond market. Spreads are blowing out. The ECB held an emergency meeting. They're trying to decide what to do. There is a precedent for what's going on right now. And I have to say this precedent speaks very poorly about the bank's ability to prevent a developing crisis. I illustrate this precedent using a chart of Southern European spreads, and I'll discuss why it is so relevant today. Finally, I talk a lot about various cultural issues this month. Remember, this bear market reflects a trend toward negative mood, so it's going to impact areas that sit outside of conventional finance. It's clearly impacting politics. It's also impacting sports, and there's just a ton of little interesting anecdotes that have clear parallels with previous bear markets.